Test, 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 test. One second, stream. Gonna start in just a moment here. Keep grinding. You're out. Hey man, I'm gonna catch you. Yeah. Hold on one moment, stream. All right, cool. Hey, can you hear me? All right, cool. Let me go and start my screen share, and then we're gonna go ahead and jump into talking about earnings today. So we're gonna talk about some earnings, and earnings are pretty much gonna give us the reasons why companies go up and down. So I do want to go ahead and just jump into that today, and let's go and let's jump into it. Go. Excuse me. Uh, whichever the one is in the email that was there. Like, did it send you one 10 minutes ago? Okay. Did you get one today? I see. I think it's because it's already booked. All right, yeah, it's all good. Wait, so you didn't get a notification 10 minutes before? Okay. All right, I'll make sure that's taken care of. I got you. All right, let's go and let's talk about earnings. Go. So we're gonna go ahead and cover earnings. So what happens when financial earnings release? Okay, so every quarter, okay, every couple of months, financial earnings are gonna be a report that determines the amount of money that a company made, okay, and the amount of expectations that they were trying to arise to. So if a company was projected to make $500 million, but they only made $300 million, then in that case they would go ahead and lose earnings. Okay. But if a company was projected to make $500 million and they made $800 million, then that would go ahead and be a positive earnings beat. Okay. So earnings are going to go ahead and determine the price action too. Now, just because earnings gets beat or earnings loses doesn't mean that a stock will head up or down. Okay. Stocks will do whatever it wants. Do not try and use the earnings releases to try and gamble and make trades. Okay. Try and trade after earnings releases if you're going to put down a brand new position. Okay. Wait for the price action to kick in. And then after the earnings release comes, then feel comfortable to make your trade. But never trade like a day or a couple of days before earnings. Wait for earnings if you're a couple of days before earnings. Okay. Wait for earnings to come out and then take your setup. Okay. Because otherwise it could be gambling. Earnings causes stocks to make giant moves quickly. Okay, so the moves that happen during earnings are going to be extremely instant, and it's going to be like a flash move based on the report. So let's jump into it. So the quarterly report, right? 10Q. Okay, every 3 months, public companies are required by law to reveal their financial health to the public to let them know how they're doing. Okay, it's going to go ahead and let investors know if they want to keep throwing money into the company or not. If a company is not beating earnings, then that means that they're not making any type of income. Okay, and a lot of the times we don't want to be invested into something that's not even making income in the first place. So every 3 months, public companies are required by law to reveal their financial health to the public. Okay, and let's talk about the revenue. So revenue is going to be how much money came into the door. Okay, how much money did that company make during that quarter? And the net income is going to be the bottom line. It's how much profit is left after expenses. So certain companies might have to pay for building power, warehouse cost, employees cost, etc. And the EPS, it's going to stand for earnings per share. And it's the profit divided by the number of shares that are going to go ahead and be available. Okay. So EPS, net income, and revenue. Those are going to be the three factors and the three things that are shown on the quarterly reports. Okay, so let's keep jumping into it. So the expectations game, right? The actual numbers don't matter as much as the expectations. Okay. So once again, let's say a company was projected to make 100 million, right? Expected. But then they actually made 170 million. Okay. That would go ahead and give them a beat result. Okay. So whenever you hear the words beat, that means that the results that actually came out were going to be better than what was projected or speculated in the first place. Okay. So priced in. If everyone expects Apple to make $1 billion and then make $1 billion, the stock might drop. Okay. Why? Because the good news was already bought weeks ago. Okay. So to see a stock pop, a company usually needs to beat company earnings, okay, and beat the analyst consensus estimates based on the company's averages is how the estimates come out too. So it's not just going to come out with random numbers. If a company is making around like $50 million a year, okay, the earnings might be around like 60 or $40 million expectations. Okay, it'll be around where the company is performing as of recent years. Okay, so don't just expect the numbers to just be some random inflated numbers. These are all numbers that are going to be based in and baked into averages for a reason. Okay, earnings come into play. But once again, don't try and just hop in a contract the day before earnings trying to trade like that. Please don't do that. Okay, please don't do that. Now, sometimes there's going to be little rumors as well too. You'll see like, oh, this company is going to beat earnings. Nobody knows what's going to happen until the earnings report actually comes out. So please do not lose money gambling for no reason. Okay. Wait for the earnings report to come out unless you're in a hefty swing already. Please wait for the earnings report to come out. Okay. Let's keep going into it. And understand that guidance is going to be king. So stocks trade on the future, not the past. Okay, so guidance. Guidance is going to be the company's prediction for the next quarter, how much money they're going to be making. Okay, it's pretty much going to be giving the company a trail and letting them know how they should be performing in order to get to the next level. So in any scenario, company reported record profits. Okay, but let's say next quarter looks slow. Okay, then that'll be the future. And results, okay, the stock would go ahead and crash if that's the case. So we're lowering our outlook due to supply chain issues would equal an instant sell-off, since that means they're pretty much letting us know, hey guys, the company can't expand right now because of financial issues. Okay, so guidance in the future of the company is also going to be really, really important too. There might be times where a company might lose or not beat their financial earnings, but then end up making a pretty profitable couple of next quarters. Okay, so one quarter is not going to go ahead and determine a company's entire worth. It's the consistent stream of quarters and reports year after year after year after year. If a company is consistently losing earnings, then that tells you about the company. Okay. Uh, One moment. Hmm. One moment.